Welcome to your presentation on food and beverage industry operational averages. Before we move forward, it's very important for you to understand that this has all been sourced, okay, and I am citing everything that's within these. This is all based on national Canadian averages, and quite a bit of this was taken from the 2018 Food Service Operations Report prepared by Chris Elliott from Restaurants Canada. Averages here are going to include high and low values. Some provinces have much higher labor costs, for example. Also, these values will help prepare you in understanding industry because they give you a benchmark. They should not be used as targets, considering in some cases you can do better and in other cases you may not. It really depends on other factors, restaurant type, location. So these are national numbers, right? So food costs in remote, let's say northern communities would be much higher, for example, because food is going to cost a lot more. Okay, so just keep that in mind as we move forward. Now there's different segments that we kind of evaluate here, and that's going to be full service restaurants. So these are establishments where people sit down to eat and pay at the end of their meal. Okay. These places may sell alcoholic beverages, they may have takeout, they may have a bar, live entertainment. Okay, it includes family style and family restaurants. Quick service restaurants, we refer to these as QSRs. These are places where people order at a counter or by phone and pay before eating. So it may include donut shops, food courts, takeout, delivery, anything like that. There's also caterers. So caterers are establishments that primarily engage in supplying food and beverage services under contract for a specific period of time. So it includes companies that provide food for airlines, railway companies, facilities, social caterers, what else? Social events, so parties, weddings, and receptions. Okay. It also includes mobile caterers that prepare and serve food and beverage for immediate consumption from motorized vehicles and non-motorized carts. We also have drinking places. Okay, so these are establishments that operate and serve alcoholic beverages and limited food services for consumption, like immediate consumption. Okay, so it includes bars, taverns, pubs, nightclubs, cocktail lounges, anything like that. So now that we know what we're talking about, let's look at some national highlights. So the average commercial food and beverage service business in Canada earned a pre-tax profit margin of 4.2% in 2016. Now, in the 2018 report, the earliest information they have is for 2016. That's because by the time you get together all the information, you're usually a year or two behind. Just keep that in mind. Okay? So your average commercial food service business in Canada earned a pre-tax profit margin of 4.2%. So that would be our EBITDA, because that doesn't include tax, right? So EBITDA less replacement reserve, we should see 4.2% profit margin. If we don't, we're not along the average for the industry. When we combine our food and beverage costs, we've got 35.2 was the average. Okay. Generally, 28 to 32% is going to be our food cost. Okay, so if we compare our food costs to our food sales, we should have 28 to 32% of total food sales is what we should have as our food cost. So 28 to 32% is pretty consistent. Our labor is at 30.9%. Okay, so that would be of total sales. Remember that. So combined, our prime costs are typically 64 to 69% of total sales. Okay, so that's an industry average right there. So cost of sales, when you add them both together, the industry average is 35.2% of total sales, and labor cost average is 30.9% of total sales. So together, they should represent between 64 to 69% of total sales. That's the industry average currently. Okay. Rentals and leasing costs are the third largest expense for food service operators with 8.1% of operating revenue. So 8.1% of revenues goes towards rentals and leasing. So it's actually quite high here. Okay. And then advertising, marketing, promotions is usually about 2.1 to 2.9% of operating revenues for a restaurant. Okay. So some highlights for food and beverage. Again, food costs should be generally between 28 and 32%. So that's food costs compared to food sales. For alcoholic beverage, liquor can be 18 to 20. We'll get to that in a second. So food costs generally between 28 to 32, as I mentioned, okay, of food revenues. Your beverage costs can be broken down because different parts of beverages have different costs. So liquor is 18 to 20% of liquor sales, okay, whereas bar consumables would be 4 to 5%. So this would be anything that you can consume that's not liquor. So this could be any kind of garnish. Garnishes would be kind of the main thing that fall within there. Bottled beer, you should see 24 to 28%. Draft beer, 15 to 20%. This may have a larger range considering the popularity of local craft beer. Okay, so this may have ranged a bit more over the last few years, but 15 to 20% is what you want to see mostly. Wine would have a higher cost percentage compared to everything else. Okay, soft drink, okay, that would be 10 to 15%. So once you've mixed it, that's if you're using syrup in a bag. Okay, bag in a box, a bib is what we call it. Okay, but once it's been mixed, it's 10 to 15% of soft drink revenues. Coffee should have 15 to 20%, and specialty coffee you should see 12 to 18% for specialty coffees. Okay, so these would be all the industry averages and kind of the standards as well. Okay, see how it's 2. Okay, this would kind of be the target that you would want. Now labor costs around 31%. Management salaries are 10% or less of total revenues. Okay, so that you can't do much about. It's a fixed expense. Hourly salaries for full service are 19 to 22% of total revenues. Now hourly salaries for a quick service restaurant are less than that typically. And that's because you can typically pay minimum wage for a quick service restaurant. Now, please keep in mind that this is going to be based on 2016 numbers. This may have gone up due to the fact that we have higher minimum wage now in Ontario. Now, what came with higher minimum wage, though, is higher pricing. So you may actually have seen this be fairly consistent. Okay? Employee benefits then fall between 5 to 6 or 5.5 to 6.5% of total revenues. Okay, so 16 to 19 for QSR. As we're analyzing restaurants in this course, you're going to see mostly full service restaurants being analyzed. Okay, so keep in mind your hourly should be 19 to 22%. Your management should be 10% or less of total revenues. This is more of a visual aspect where you can see the cost of sales is 35.2 for total food service, and salaries and wages was 30.9. So these are, it says Restaurants Canada 2018, that's the source, but this would be 2016, 2017 numbers. So combined, your prime costs represent 66.1. That's total food service. Okay, but at full service, it's a bit higher. It's slightly higher. Okay, your quick service restaurant, you'll notice your cost of food is a bit, it's pretty much the same, slightly lower. Okay, but your salaries and wages is where you get to save a bit of money here, so your prime costs are a bit lower. Okay. For your caterers, you're going to see labor being quite a bit more expensive, and that's because of the undertaking for any kind of event like that. And then drinking places, you'll see labor being quite cheap. Okay. And your cost of food is still fairly high, your cost of sales is still fairly high, but you make up for it with your labor. Okay. And then lastly, you'll see your pre-tax profit. Okay. Being fairly consistent. Catering will have higher because if you go back to this moment right here where I said rental and leasing costs are the third largest expense for food service operators. Okay, when you get to catering, many times you have less of an expense here because you don't have a full restaurant that you have to lease. Okay, you have less leasing costs here for sure. Okay, your administrative and your total other expenses seems to be quite a bit lower when you're actually going through catering. Okay, so they will have a higher pre-tax profit. Okay, the reason why full-service restaurants may have less, well, that could fall in between the fact that their labor is a bit higher, and that again is your minimum wage increase. Okay, and then also they may have higher leasing costs as well. The big thing is that's important to show is Ontario. Okay, it's actually the least profitable province to own a restaurant in, according to the most recent reports, with a profit margin of 3.1%. Food and labor costs are on par with national average, but rental and leasing costs are actually more than 9%, which is the industry average. Okay, so real estate renting and leasing in Ontario seems to be quite a bit more expensive than the rest of the country, which has an effect on our bottom line here. Okay, and then rising labor costs are not going to help. Okay, so up by 7.6% for this report. Okay, so labor costs continue to increase in Ontario. That was in large part due to the most recent increase. So please review this presentation, feel comfortable with the numbers, with some of the industry averages, some of the key ones, so that you are more knowledgeable moving forward and you can analyze income statements even better for restaurants.